Hi there, welcome to Nepi Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. Time is almost 9 a.m. In fact, it's going to click over to 9 a.m. now. Yes, there we go. So it is now exactly 9 a.m. And hopefully you survived yesterday's bloodbath on the ASX. Fully expect a pretty good day on Monday because, yeah. Wall Street was up pretty big. I did see gold. Gold was up. Bitcoin was up 12% or something like that. So I fully expect a pretty good day or pretty good rebound on Monday. And fun enough, I had a look at the Dow Jones Industrial record highs. Yeah, record highs. So even though there's all this fear, I suppose, in the markets right now, it's really interesting that the Dow Jones Industrial is at a record high. Okay, so let's get started. And I was going to say mention last week's video, but I can mention last week's video in the next question, not this question, but the next one after this, I think. Stu Percy, I may have missed it, but you did, or did you comment on Lumos Diagnostics announcement and 20% rise after falling for a few days? Love your work. Thank you. Yes. I'm pretty sure I missed their pennies for say they released, I believe it was on the 29th. They released at about 2:22 p.m. Might be a little bit out on that time. So initially I missed it, and then the share price did rally after that. They released that Appendix 4C. They also released a presentation a few days later. So the share price has rallied, although it did drop yesterday a little bit. So let's have a look. So 222. And the reason I know that 222 is because I had a look at Lumos Diagnostics just before I started recording. That's one of the benefits of you being the first question. I actually do have a look at your comment, and sometimes I go, before I start talking about Lumos, I'll just have a quick peek at the company. Okay, so I do own some Lumos Diagnostics shares. In fact, I did buy some more on that bounce. So if we have a look at the trade history, yeah, it bounced 20% on the day. A lot of volatility in this one. In fact, a few days previous, it dropped 11%. Then after the big rise, it dropped to 9%, then it rose 7%, then 17%, and dropped 9.62% yesterday. So I would consider this one highly volatile. So their pennies for C in itself wasn't that exciting. And the main reason behind it is, in fact, if you have a look at their presentation, I'll just go through, have a quick look at the numbers. So receipts 3.3 million, operating cash flow negative, free cash flow negative. They don't have a lot of cash on hand, or they do have some financing facilities. So cash on hand 2.99 million, so 3 million, and they have financing facilities of unused financing facilities of 3.3 million. So they have enough cash. But we haven't really seen any rapid rise or in fact any rise in revenues receipts over the last 4 or 5 quarters. The main reason I'm interested in Lumos is because of that massive deal they made. Was it in July, I think? July? Was it August, July? Somewhere there. Here it is, 16th of July, signing a pivotal US February DEX agreement, and the value of this particular, or the numbers they used were pretty big. So 60 exclusive agreement valued up to $487 million with Phase Scientific for distribution of February DX in the United States. Now, in their presentation, they did mention something I think is quite important. Let's have a look at it. So they released this presentation on the 3rd, so quite a few days after they released their Appendix 4C. I do prefer companies release a presentation alongside the Appendix 4C because this was not market price sensitive. So I did miss this until I had a look at Lumos because of this question. So thank you. Was it Stu Percy? Thank you, Stu Percy, because I might have missed this presentation. So if we have a look at this, yeah, this is the revenue over the last 5 quarters, revenue mix, net cash generation. So revenue hasn't really gone anywhere over the last 5 quarters, but they are, and you can have a look at this, but they are expecting, hopefully, FDA grant of CLIA waiver anticipated in this particular quarter. So by end of the first quarter calendar year 2026. So we're talking about in the next 2 months. Yeah. Hopefully they do get that because that does unlock more addressable market. And they sort of mentioned that in this February DX market opportunity in the US, 1 billion. And this particular waiver grant will increase their TAM by 15-fold. So the CLI waiver grant, and that grant enables facilities, physician offices, doctors' offices, standalone urgent care centers to perform diagnostics without laboratory oversight. So I do think this is quite important. So from 5.6 million patient interactions to over 80 million patient interactions. So I'm wondering if this particular, if they do get this waiver, there will be a rally in the share price, or if the market is already pricing it in. Now, I wouldn't think that Loomis is overly expensive at these prices, and I do expect some nice growth in revenues over the next few years, but I'm just not sure how much. So market cap of the company is only 186.22 million. So if they get a really good growth, and you can see share price has rallied 683% in the last year, and that's because of that announcement in July. So let's have a look at the chart for Loomis. So that was the catalyst for me to take a position in this company. There it is. Don't know why yeah, anyway, so there it is, back in July. Share price at that, or actually before that, the share price was only like 3 cents or so. And the share price on that day went up 144.83%. It's a sort of announcement that would always get me excited, particularly when I see any sort of financial numbers. And the share price has done, the chart looks fairly well. We did have a bit of a pullback recently, but then when they released their pennies 4C, share price popped up on that day and it looks okay. It doesn't look as good, the chart, as it was from July through to end of 2025 when the share price did reach a peak. Actually, it reached a peak on the 5th of January, and that peak was 33 cents. Anyway, talked a little bit more than I was going to on that question, but it's okay. Oh yeah, so Matthew says video wasn't long enough to be honest. So last week's video was like 2 hours 30 minutes or something, which was ridiculous. Funny enough, when I do that sort of video, it doesn't really seem like it goes that long. So I do time it. I have my phone next to me, so I do time it. And I want to keep the videos preferably under an hour, but most of the time they're about an hour and a half. So I try to answer as many questions as I can. And sometimes I just warble on. I just go on. And Kalimar didn't understand sarcasm, apparently. Michael Tan, you're looking at it. Oh, thank you. Yes, did reply to this one. You're looking at a different Terra Metals. So I was talking about Terra Metals, and the share price popped up on a particular day, and at the same time, there was another company called Terra Metals that released announcement, or didn't release an announcement. They announced a deal, and it got me a little bit confused. And maybe companies should not have the same name. Yeah, companies should not have the same name. See if I can find that article. So, oh, I've got to change my settings on my mouse. There we go. Terra Metals deal. Oh, did I have it there? 25th of May, 29th of May. No. Yeah, I think it was this one. Terra Metals, Metal X. So I was looking for announcements around this time and I saw this. And yeah, Terra Metals is a completely different company. Anyway, so thank you for that. I do make mistakes. We all make mistakes. Oh, Kelly Ma. Hi, Nappy. Have you taken a position in Apollo Minerals? Thanks. Yes, I have. Yes, I have. Apollo Minerals, ticker code is AON, I believe. AON. My plan is to be little bit more selective when it comes to these specky stocks, but this is definitely a specky stock down 17.65% on Friday. I would not be shocked if the share price rallies 15-20% on Monday. That would not surprise me. Or they released, what was it? When did the share price go up 200%? I forget which day that was. 27th of July. Share price went up 200%. Oh, that's right. 6.5 million placement to drive Kuflin's tungsten gold project. Oh no, it was the restatement of Kuflin's high-grade tungsten gold project. That's right. That's right. It wasn't the placement. It was this particular announcement that the French ministry, the Directorate General for Energy and Climate, have given them or reinstated the exploration permit for a 5-year term. That was up 200%. I am looking for these sort of catalysts. And this is a sort of catalyst that I wouldn't have been that excited in the past, but I've noticed a lot of times share price of companies will significantly rise. And when I'm say significantly, I'm talking about 10 bagger, even a 100 bagger on announcements that at the time don't look that exciting. And I wouldn't have thought this was that exciting, but I had a look at the market reaction up 200% in one day. And I'll be honest with you, that was enough for me. That was enough for me. And some people say, well, no, 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 you've missed it. You've missed it. So I took a position of Apollo Minerals on that day. I think it was at closing on that day. And the share price, they did a couple. In fact, I'm pretty sure they went into a trading halt. Yeah, the next day. And I was thinking at the time, oh, I got into this one too early. I should have just waited. And then the share price went up when they came out of that trading halt for a capital raising. So that's another good sign that the market liked it. Yeah, the share price went up 37% the next day. Anyway, so I could imagine this, and you can see lack of liquidity before it. So this has really improved liquidity. And yes, I do have a trading position in Apollo. I have no intentions of selling this one. I am thinking of selling some positions on Monday, particularly if we do see a pretty good rally, but that could be the worst decision. Maybe this is the low for our market. Nice insight from Bob McMallen. Gemini's advice. I'm assuming I am a Gemini, even though I don't really believe in astrology. I think astrology is stupid. Astronomy is great, but astrology is pretty stupid. But I am a Gemini, and I'm pretty sure this is not my advice or anyone who is a Gemini's advice. Pretty sure this is the AI thing. When gold versus silver is lower than dollar 1 to 50, was 1 to 46.95. Silver is considered expensive. All indicators were saying sell. The question is, will the ASX follow international gold down 8% given has already pulled back on Friday? So I did take a lot of profits in silver a while ago just because I just didn't like the chart. Well, I like the chart, but the run up was just too extreme for me. Yeah, Nasdaq up 2.15%, Dow Jones up 2.47, Russell 2000 up 3.6. But I'll talk about these tomorrow. Anyway, so gold up 3.99%. Silver just had a run up way too rapidly and it had accelerated. And whenever I see that, I get a little bit, I wouldn't say nervous, but it's a sign that it's running up too quick. And I'll be honest with you, I did not even think about this sort of thing. I have heard this in the past, but I did not even think about that. Did not even think about looking at that. My biggest problem may have been that if silver did pull back, there was a chance that a lot of other commodities would pull back with it, but maybe not to the extent of silver. And we saw that with gold down 10%, copper down as well. I did not think that was going to happen. Silver up a little bit today as well. Has rallied off the lows pretty nicely. So is this the bottom? Is this the bottom? I'm just a little bit nervous the amount of volatility we're seeing in some of these commodities because a lot of times when you see volatility, it's usually a sign. Well, it's usually that the market is getting a little bit more fearful, that sort of thing. But the question becomes, when does that fear stop? And maybe it's now. Maybe it is now. And again, Dow Jones record highs. I was shocked when I saw this morning. Dow Jones record highs. Yeah. So the place to be right now is the Dow Jones Industrial Averages. And by the way, for those who have no idea, do a jet. I'm just gonna show you the companies in the Dow Jones DGI components. So there's 30 companies, components. See if it does it just by misspelling components and DGI. See if it understands. Yeah, no, it doesn't. Dow Jones. It, DGI is yeah, that's the Dow Jones 30 companies. And if you have a look at this group of companies, like 3M Company, American Express, there's Amazon, Apple, Boeing, Caterpillar, Chevron, Cisco Systems, Coca-Cola, Disney. Yeah, it's a nice group of companies, in fact. Nike's not done well. Procter& and Gamble, Salesforce might be under a bit of pressure, but quite a few of these companies must be doing well. Visa, MasterCard, Walmart. Oh, Nvidia's in there as well. There you go. Nvidia replaced Intel in late 2024. Actually did not know that. Did not know that. But by the way, Nvidia is just holding up pretty well. Microsoft share price had pulled back a fair bit. So a lot of really good companies in the Dow Jones Industrial. So it's not a crappy index. It's a group of really nice 30 companies. Anyway, the whole point of this was, yeah, gold versus silver ratio, which, yeah, it's real. It's a thing. I haven't done much research on it, but it does seem like it's a thing. Ben Coleman, when you get your low for zero, can you let us know? No idea. The low could be now. The low could be now. It may not be now, but it could be now. Probably when it's 90% down. Well, I'm not sure that's going to happen. Now, I do hold Xero, and probably the only good thing I've done with holding some of these companies, these tech companies, is I did take some profits probably about 7, 8 months ago. I did take profits because they were looking a little bit richly valued, but did not completely sell out. And the reason I did not completely sell out is because I've done that in the past when I've completely sold out because I thought they were expensive and the share price of the company just kept going up. And I've done that with 2 times now with JB Hi-Fi. In fact, let's have a look at JB Hi-Fi. I've done this twice with JB Hi-Fi since I first took a position. And I think I've told this story numerous times before, but why not talk about JB Hi-Fi again? So initially I bought JB Hi-Fi back in, yeah, it was definitely, it's around $8. So between 8 and $9. So it would have been in June 2012. It was the most shorted company on the ASX at that point in time because they thought Amazon was going to kill this company. So it was the most shorted stock, and everyone saying, "Oh, have a look at the most shorted stocks and don't buy that companies." But every single time I went into or walked past a JB Hi-Fi store, it was chock-a-block full of people. So many people in there compared to say Dick Smith electronic stores. No one in those stores, and they went bankrupt soon after. Maybe not soon after, but within the next few years anyway. And so I took a position in JB Hi-Fi, but I sold out when it went up, 100, not 100-fold, went up double. I just sold. So I bought it probably 850, we'll say, and I sold not long after, maybe $17. And since then, I should have just held on for the long term because I would have done pretty good. And then I bought some more JB Hi-Fi. It would have been somewhere in 2023. Share price was around $40 to $42. The P ratio of JB Hi-Fi was maybe 10. I think it might have been 8. The P ratio of JB Hi-Fi was 8. And I had a look and I went, okay. Chart wasn't doing anything, but I thought there was good value. I would consider this company to be a high quality company. So if you have a look at the 200-week moving average, so when I bought in, funny enough, when I bought in 2012, the share price was well below that moving average. And when I bought in 2022, the share price was right on the moving average. And then when the share price went up a fair bit, I just, again, completely sold out. Although I sold out at about $90, I think. And the share price is now below it. So maybe in hindsight, that was a good thing. I didn't realize the share price of JB Hi-Fi has fallen so much. It's gone from $120 to 80, so it's fallen 33%. And the share price is moving towards the 200-week moving average. But the problem with that is the P ratio is still high, 19.76. So if you have a look at the historical, I know this is completely off topic, but if you have a look at we'll get back to the real question or answering the real question in a second. But if you have a look at the P ratio history of JB Hi-Fi, we won't be able to see the P ratio back in 2012 when I bought. But when I did buy, yeah, it was 8. It was 8. Yeah, 8, 7.5. So it's still quite a bit elevated from those sort of levels, and at 19. So I'm not sure if you could say JB Hi-Fi is, yeah, it was 28 not that long ago. It's one of the reasons I sold out because I'm pretty sure I sold out when the share price or the P ratio got above 20. I went, nah, this is too much. So the whole moral of this story was the question of completely taking profits or just selling some of your stock, some of your holdings when you see the valuation getting high. And this is what I did. I pivoted from completely taking profits to selling maybe half or maybe two-thirds. And that is what I did with companies like Xero, Pro Medicus, REA Group, maybe Technology One, Aristocrat. Definitely sold out of that one, not completely. In fact, I took profits on maybe 6 or 7 at the start of the year and start of last year. And at the time, I was thinking, oh, maybe I shouldn't do this. And right now, I'm thinking, I'm glad I did it. And maybe the biggest problem was I should have completely sold out of those positions. Anyway, back to Xero. Back to Xero. Let's have a look at Xero's chart. So, in terms of where the share price, there's me buying. So, April 2023. And I bought right on the 200-week moving average. I didn't know I was doing that at the time. The share price of Xero has more than halved in a fairly short period of time. In fact, it's way more than halved. So it's down, yeah, 59, almost 60%. since its highs, and they did an acquisition at the highs. And I remember they were doing capital raising, and I was like, no way, I'm participating in this capital raising. In fact, I think I sold near that. I might have sold on the day, in fact. I'm not the biggest fan of those sort of acquisitions. I don't know if it's going to be successful, but the share price has dropped a lot. This was back in June. Oh, yeah. So I would have sold out before this. So I would have sold out maybe May, April. I don't know. I can't remember exactly when. Not sold out, but took profits. And I thought maybe with this capital raising, you could, add to your position. I was like, no way, no way, no way. Anyway, so if you go back to the weekly chart, at this point in time, the share price is well below the 200-week moving average. So there's a lot of negative sentiment drawn into or priced into this company right now. And historically, when the share price gets to this level, it's a buy. But the question becomes, how low can it go? And I have no idea if the low is in. In fact, last time I bought on the upswing. Yeah, the share price had found the low, and the share price started to rise. I'm not sure if that was the reason I bought, but I did. Yeah, it did play a part, if I remember correctly. It did play a part. I thought the low had come in, and I'm pretty sure they had released something positive. Yeah, okay, yeah. So the share price did go up 11% on 9th of March 2023. And I think that was one of the catalysts or reasons I took a position. And in fact, uh, based off the chart as well, the daily chart, yeah, that had been definitely a turnaround in sentiment for Xero at that point. So I think this was a combination of technicals and the valuation of the company. So no idea. And you can see I bought quite a bit above the low. No idea where the low is. You're catching a falling knife. That's a good saying. The low could be now. It could be another week from now. It could be 2 weeks from now. It could be 2 months. It could be 2 years from now. And maybe the share price low will be $20. And if it gets to that point, I would probably take a position in Xero. I do think there's a little bit of fear at play here. And that's why the share price is dropping a fair bit. I think one of the things I have to do for shorter videos is to shorten my answers. Yes, Shu Percy, I got very lucky and sold half of my silver ETF during the week. My question now is, will it bounce? Should I buy back in or will it continue down? Okay, so let's have a look at silver. So for full transparency, I did sell, what was it? 70% of my silver holdings on, it wasn't on the big down day. It was on the big up day. So it was either on Monday or Tuesday, no, it would have been the 26th because there was no selling. So it would have been the 27th. I've sold 70% of my silver stock. And I thought that was a wrong decision because the next 2 days it went up. And I was thinking, maybe I was being a little bit too impatient with selling some of my silver stock. I just did not like the pattern. And the whole reason I don't like that pattern is acceleration of the price of silver, which is a bit toppish. My biggest problem when it came to silver and gold and other commodities is I just was thinking of silver at that point in time. Wasn't thinking about other commodities. And if silver is going to drop 30%, there's going to be other commodities dropping with it. But I did not know this was going to happen. Okay, so very volatile silver right now. It looks like it's bounced off the 100-day moving average. It went straight through the 25 on like butter, but we're seeing day after day a lot of volatility in silver. We're seeing like that day down 31%, down 2%, up 8.2%, up 1%, down 9.1%, up 0.24%. But the intraday swing we've seen just today or the last 24 hours has been 18%. So from the low to the high, 18%. But the price of silver has closed near the high, which is a positive thing. In these sort of situations, I would fully expect it to be, probably was definitely oversold. In fact, just to confirm that, we'll put the RSI in. RSI. Oh, not that oversold. So yeah, I thought it would have been way more oversold, but I would have thought this is a little bit oversold. And when you see something drop like this, there's going to be excited people going, "Oh, what a bargain now!" And that is why you tend to see bounces. People go, "Oh, what a bargain!" It's sort of recency bias. Oh, the share price was $150 yesterday. Now it's $21. What a buy! And then the share price goes to zero because the company, something wrong with the company. Anyway, that's probably what happened with Enron. Share price dropped a lot. Oh, what a buy! And then everyone lost their money because they went bankrupt. I'm not sure if that happened, but anyway. Anyway, your guess is as good as mine with this one. I would almost guarantee you, I'm a Facebook I'm a Facebook member of a lot of, I'm a member of a lot of ASX and international investing or equity investing Facebooks, and so many posts are saying, look, oh, we've got this right, and this is what's going to happen. But if they're wrong, you never hear it from them again. But if they're right, oh, they will market themselves, saying, oh, look how right I am. And I could probably say there will be some saying it's going to bounce, and some say this is a top. I do get a little bit, not nervous, but a little bit more wary when I see something drop 31.37% in one day. Tranquil event, but I'm not sure if that is, you can use that for commodities. I don't know. I've never really thought about that when it comes to commodities. So for me, it's just a wait and see. So I've not bought any silver, and I haven't sold out of my rest of my silver holdings just yet. Fantastico. Some insight, interesting in talking about silver. Some interesting, maybe not insight, but I don't know what do you call this, but some information or info. Not just with mortgages, there are YouTubers preaching to use super for buying gold, silver, metal, commodity stocks. Yes, and Happy Now says yes, and people have done this. Okay, I'll just agree that people have done this. Uh, that for me is a sign of a top. That is a sign of a little bit too much FOMO, and a sign there is a bit of a bubble, and this could be the bubble bursting. When I see this sort of thing happening, YouTubers preaching for people to use super for buying gold, silver, metals, commodity stocks, sort of like back in 2020, there were so many YouTube ads about people saying interest rates are going to stay this low forever. The problem now is you can't get your hands on enough debt. You have to get your hands on a lot of debt. Make sure you get your hands on a lot of debt so you can buy more and more houses, that sort of thing. So many ads like this, like that back in 2020, 2021, before interest rates started to rise, and then they all went away. There should be, I know ASIC really hammers hard, maybe not hammers hard, but you can't give any sort of advice when it comes to stocks. But when it comes to maybe commodities, definitely when it comes to crypto, you can give any sort of advice to anyone out there, which I do have a problem with. And I sort of understand it. The banks and the institutions what control when it comes to equities, but when it comes to Bitcoin, Ethereum, and all that, they don't really care because, yeah. Anyway, so that is a sign. For me, this is a sign. When you have people preaching to use super for buying gold, silver, and metals, commodity stocks, that could be a sign that, well, stocks. Well, I'll just say this, using super to buy stocks, yeah, I think that's what I do. I use my super to buy stocks. So that is actually what I do. But I think that's reasonable. But buying gold, silver, metals, commodities, just because it's going up and up and up, and preaching, I think the word preaching, yeah. Anyway, I'm going around in circles now. Qoria, Chief. Qoria is definitely due for a bounce, and my guess is this will happen this coming week as people rotate of commodity stocks. Should have picked up on Friday, like originally planned, ready to place an order on Monday, but too late now, mark stead. I am shocked that Qoria is sort of back to where it started. So I have a little bit more to say about Qoria because there's another comment about Qoria. So down 7% on Friday, also down 5% on Thursday after going up 28%. So I think the market is really skeptical about this particular merger. And I think I'll talk more about the other or the counterparty to this. Is that what you call it? The other party to this merger. I think the market is skeptical about the valuation of that particular company. Anyway, so Qoria down to 38 cents. I'm shocked because when it opened at 50 cents the other day, I was thinking maybe I'll sell if it goes up more, but it hasn't. It's actually gone down from 50 cents to 38 cents. So there could be a lot of value in this one. And I do prefer the other company, the private company. And I do think this is more of a backdoor listing because when I looked at the presentation, I was more impressed with the other company than I was with Qoria, Aura. Okay, so anyway, I'm just shocked it's down to 38 cents. Not buying any more though. Okay. David SH. Great stuff, Neppy. I'm also loving the members only content. You're welcome. The companies like Xero, Technology One, and Gentrack falling because of the view that they will be replaced and substituted with AI applications, technology layman here. If so, do you believe this to be valid? Okay, this is really interesting because about a month ago, I'm not even sure how long ago, I did read comments from a CEO who said in-house, or what they have gotten rid of all their SaaS contracts and are building all those bits of software, whatever they used in-house. And I thought that was interesting at the time. There was no other chatter about this SaaS companies being sold off because of this. So I thought it interesting at the time. And I was trying to think, well, is this a real thing? It could be a real thing. And then over the last few weeks, there's been so much chatter about this happening. The reason why all these companies are being sold off, and I think it's valid, not the reason, but the stocks are being sold off because of the fear that every company will be able to build all their software in-house. So maybe like Xero, you'll be able to build all your accounting stuff, your accounting needs in-house. I don't think it's going to be as simple as that because you probably need a lot of people to be able to build that sort of software. So I don't think it's going to be as simple as that, that all these companies are just, their needs will be absolutely eliminated instantly. If it does happen, it might take time, but I do think there is a threat. I do think there is a threat. And I don't think a lot of people haven't fully realized what they can do with AI. And the other thing is, AI will improve significantly over time. Significantly. It would improve. It's improving almost every week. So it's going to improve significantly. And I think there is that threat. So what I did, I can't remember exactly which CEO mentioned this. I just saw it. I didn't take note to the article who said it, but I did go to ChatGPT talking about AI, and all I said was, which CEO recently stated his company got out of SaaS contracts. Don't worry about the spelling. The AI knows you're misspelling because they are doing everything in-house. I was trying to typing without looking. Uh, and the answer it gave me was Klarna's co-founder CEO Sebastian Siemiatowski, who said recently reduced or shut down a large number of SaaS contracts, including dropping Salesforce, CRM, and Workday's HR platform as a part of a push to replace many external SaaS tools with internal systems and AI assisted solutions. I understand why companies will be doing this, to be honest with you, and the efficiencies around this, cost savings, will be pretty big. Anyway, so I also wanted to know if this was the only one. I wasn't sure if it was Klarna's. If you don't know who Klarna is, it's a buy now, pay later. In fact, Klarna, I'm pretty sure Klarna is the original buy now, pay later. We heard people say Afterpay was it. No, it's Klarna was the original, if I remember correctly. I could be wrong. Klarna original, buy now, pay later. Yeah, founded in 2005, well before Afterpay. So Klarna was the original buy now, pay later. So I heard some people say, including experts say, Afterpay was original. No, it wasn't. It was Klarna. And I think they originally listed. Is that right? Anyway, so I just wanted to know if there was any others CEOs in going down this path. And yeah, in fact, CEO of Microsoft hasn't said his company cancelled SaaS contracts, but he's widely reported to have stated that traditional SaaS business applications are becoming obsolete, arguing that AI agents and new software paradigms will replace the way SaaS apps are used today. He commented publicly that the SaaS era as we know it could collapse as AI agents take over business logic and workflows built into apps. A statement many interpreted as signaling the end of SaaS as a dominant model. So I definitely think there is a threat. And there's other CEOs who have mentioned this. Yeah, anyway, but those are two main ones. But I can't remember if it was one of those or someone else. I thought for some reason it was a CEO of a smaller company, which yeah. Anyway, so definitely a threat, and I think this is the major reason why we are seeing all these SaaS companies being sold off, all these software companies, but a lot of other companies being thrown in as well, which I don't think are under threat. We're talking about Pro Medicus won't be under threat. 40 Medical won't be under threat. It's completely different. And I think a lot of those companies are being sold off alongside these. And the other thing is, who's going to benefit from this? Who's going to benefit from this? We're going to see, Alphabet benefit from this, and all these other AI generators or AI, whatever you want to call it, benefit from it. So there'll be other companies really benefit from this, and other companies not. And by the way, Alphabet, I'm pretty sure, but remember, Alphabet was not that favored not that long ago, or Google. Well, now it's Alphabet. So look at the chart for Alphabet. It wasn't long ago that this company, everyone thought they were going to maybe not die, but they were under threat. But the share price of Alphabet's gone up. Yeah, it's more than doubled in the last year. Microsoft share price plummeted the other day, but has recovered. Well, it hasn't recovered. I thought for some reason it recovered. Maybe I'm thinking it was another company that's recovered. No, no. Yeah. So at this point in time, it does. I do think just based off what we're looking with Alphabet, that people think this company is going to win. Gemini is going to win. Maybe not win, but it's going to be a force. And it doesn't look like it's heading that way. So I do think it's valid, but is the market overreacting? A little bit. Too much, maybe. Paulie, can you have a look at AEL and AD8 charts and share your thoughts of the company's future direction and many thanks? So Audinate and AEL have no idea. So for let's do AEL first. I don't know anything about this. Amplitude Energy. No idea about this company market cap. It's a big company. What do they do? A very quick look at the most recent quarterly report released on the 21st of January. I'm assuming they are a producer of gas or something. Based off that, that looks like they are a gas producer. Yep, gas processing plant. I think that's PJEs. That's probably potential joules E. Is that right? I have no idea what that is. PGE. Petajoules equivalent. So I was close, but not in the ballpark, which doesn't make sense. When I look at these sort of things, I like to see if cash on hand has increased. Record quarterly revenue of 71.6 million. So gas, net reduced, that's nice. Cash and cash equivalents. So cash has gone up and they've decreased their debt significantly, like looks like. Net debt was 229 down to 34. Did they do a capital raising, that sort of thing? I have no idea. Production has been increasing steadily, looks like. Steadily increase in production. That's nice. I know nothing about this company. Now, first thing I'd say is this company is a producer of gas. So the price of gas is very important for this particular company, and the future of gas is very important as well. Typically, for these type of companies, I don't have any interest in long-term holds because they are price takers, not price makers, and the share price can be highly volatile. But the most important thing is the chart for me, not only for the company, but also for the underlying commodity. And it does look like the chart's pretty good. Now, well, in fact, the weekly chart looks pretty good. But you can just see by this weekly chart that, yeah, it's not the greatest company. So this goes back 20 years and share price has done nothing. And to be honest with you, price of most energies, oil have done nothing over the last 20 years. And for me, it's just wait and see. But the weekly chart doesn't look half bad. And so you do get these runs in the share price up and down. So it's trending. And that is exactly why I would trade this, if anything else, and sell it when it looks a bit toppish. So you could get double from here. I mean, last time the share price got to its high back in 2019, the share price got to 650. Okay, so that's Amplitude. But honestly, you probably know more about this company than I do. And the other one is Audinate. So I do like Audinate. This is another instance where I think the share price has dropped recently because, or maybe not that much. I think it dropped on Friday just because everyone was selling everything. Sell everything. Just telling my broker, sell everything, just sell, sell, sell. And maybe on Monday they'll be going, buy, 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 buy it back in, buy back in. Anyway, Audinate for me is at this point in time, I do own some shares and I'm going to buy more shares, but I haven't got the signal. Now, they have gone through some tough times. And if I remember correctly, they expect the tough times to last a little bit more and then things will turn around because there wasn't an oversupply, but most of their customers had a lot of inventory or their at Audinate's inventory, and they had to go through that inventory. And then eventually we're going to see a little bit more buying coming in, something like that anyway. I won't go through their presentations, but this company, I do think the share price and the valuation is near the low. I'm not sure how much lower it's going to go. But I would prefer personally just to wait for a catalyst, something positive, because the share price has dropped a lot, $23 down to $4. And my biggest mistake with this one was not taking profits when the share price got really high. Just saying, hey, I'm just going to keep on holding these shares. Even when I got signals to sell. Yes, I got technical signals to sell when the share price was about $16, $17. I was thinking, oh, well, look, I got a signal to sell, but maybe the share price will rally from here and I'll be ruining what I should have done. And this is what I do now. I should have taken profits. I should have completely sold out. I should have just like sold half. Anyway, but the main thing here is on occasion, you do see the share price rally. So the last really bad news the company did release was August 2024. Well, they released some slightly negative stuff. When they released results in August, share price down 21%. I suppose that is a bad day. But you have seen share price rally. So this is the market getting a little bit too excited, a little bit too early, in my opinion. And each of these rallies, I didn't get that excited. But what I'm waiting for is a nice consolidation period. We're maybe in that right now. And the next thing I really want to see, this is the daily chart. I want to see the share price break out on positive news. And if that happens, or maybe even when that happens, that's time to buy. This they do have a moat. I'm pretty sure they have a moat. I have heard some people say they don't really have that much of a moat, but their competitors' market share going down and Audinate's market share is going up. And that would be a sign that what an Audinate is producing is superior to their competitors. And in a way, unless their competitors can catch up, which I have heard they're not even trying, then Audinate would have a moat. Because superior product is a moat. And whether that can maintain that moat moving forward, I don't think it'll be that easy to get into this field. Anyway, so Audinate, so for me, it's just wait and see. Just be patient with this one. And unless you think there's really good value at these levels, which, by the way, I think there's a chance, market cap is 364 million. And if we have a look, just a quick look, I'm pretty sure they have been profitable in the past. What's happening here? P/E ratio. No, I don't want to go P/E ratio. Oh, that's the first time that's happened. When I was looking at a metric for one company and then I went to another company and it maintained that metric, it didn't used to do that in the past fiscal AI. They might have changed something. Anyway, so this company, I'm pretty sure they've been profitable in the past. You can see that dip in revenue. So revenue had been climbing really nicely until the last year. And I'm pretty sure I have good high confidence that the revenue will start going up again. And if you have a look at income, so profits were up to $10 million and then negative last year. So at a P ratio of like 30 based off profit a year ago, I don't think that's too rich for this company because this company could double their profits fairly easy from 10 million. But at this point in time, just a little bit too early. For me, Marcus Stent, I hold Alpha APH, which is a high grade alumina company, Purity Alumina, something like that. And they have offered a discounted share offering. Being new to trading, I'm not sure if it's good value. How do you review these type of offerings to determine if they're good value? Any help appreciated. Okay. Problem with this company is I think it's really hard to give a value of what's the ticker code? AH. What's the ticker code again? Ticker code APH, A4M. I'm pretty sure HPA is high purity alumina. I could be a little bit wrong. Okay, so successful $225 million capital raising. Wowzers. Oh, a capital raising presentation. So what I typically do in these is when I'm honing a company and a company is doing a capital raising, I look at the capital raising price and then I see where the share price opens at and maintains. And if their share price is, say, 10 to 20% higher than the capital raising price, then I will become keen. If the share price falls to the capital raising price, I have no interest at all. I have heard people say I participate in the capital raising no matter what because I'm supporting the company. Support yourself. You don't need to support the company. Support yourself. The company doesn't honestly need your support. If they're raising 200, and by the way, most companies wouldn't say ignore, we ignore retail investors, but retail investors typically get screwed. So this $225 million placing or capital raising, The placement is 75 million. Ooh, they're getting a lot of money here, up to $704 million in existing available funding. Ooh. So a lot of times a company will do a placement to institutions, a really big placement to institutions, and a small placing to or share offering to retail investors, and retail investors get screwed. And I'm not saying that's what this company is doing, but look after yourself. Look after yourself. So what I do is just have a look to see how the market reacts to it for this one. So let's have a look. This capital raising was done. I don't know anything about this company except whatever. So they're done at 75 cents. So it looks like, yeah, 75 cents. You can apply up to $30,000. Now, they don't mention how much is available for the share purchase plan. Yeah. So this could be scaled back. I don't know. Let's have a look. Cap or apply a scale back on the S&P. So I did this with Tuas recently. Tuas, TUA, they do capital raising. And the share price opened significantly above the capital raising price. So I applied for $30,000 worth of shares and it was significantly scaled back. Significantly scaled back. So if you have a look at Tua's chart, they did I can't remember exactly how much higher the capital raising was done at, but it was pretty significant. And that's why the share price popped up 30% on the 12th of August. And I applied for maximum and it was scaled back. And then I completely sold out of those shares because it was instant profit. That's what I do. I look at where the share price is compared to the capital raising. For this case, it's 75 cents. And let's see what I would do. So if the share price was say 85 cents, 90 cents, I would participate. If the share price is say below 80 cents, more than likely I wouldn't. So 72 cents, I wouldn't even think about. You can buy shares on market right now at a price below the capital raising. So for me, I wouldn't even think about participating in this capital raising. Think about yourself, not think about the company in this case. The company doesn't need you. Yeah, the company's got a lot of institutions putting a lot of money into it. That's the way I think and would think about this particular capital raising. Yeah, if you want to buy more shares, buy at 72 cents instead of 75 cents. Oh, another one from Marcus Stent. Thanks for the great info. Can you please discuss how you manage your potential trades? I'm starting to get watch lists everywhere, having trouble evaluating them, trouble prioritizing them, and trouble keeping my paperwork and spreadsheets in order. I'm a bit out of control. Any help appreciated? PS, happy for you to point me to a previous video. I don't think I've ever done this before, manage your potential trades. All I do is I have a group of watch lists. Okay, actually, in fact, what I'm going to do is start at the beginning. So every single day, I go through announcements. I think I've got to refresh this. Every single day, I go through announcements. I only look at price sensitive announcements because going through every single announcement, you get so much crap here. Like updated securities trading policy for Divarsi. Who cares? Notice under section 0708A for Great Northern Minerals. Who cares? But sometimes you do miss good announcements by just eliminating most every single announcement. But what I do is I filter, for instance, 605 events. I filter only price sensitive announcements because the best type of announcements are price sensitive. So only 74. So I go through these announcements, not every single one. I have a look at the titles, and typically what I'm looking for is interesting titles. For instance, Brisbane Broncos profit guidance. They must be having a good day because the share price was up. Yeah, there we go. 30 to 40% above. Well, they did win the premiership last year, so I suppose. Anyway, that's what I'm looking for. Profit guidance. I look for half yearly report and accounts for companies I'm interested, not flagship investments. Well, I might have a look at that. It's just a little bit interesting. What else do I look at? Yeah. A lot of times what I'll do is, particularly if market is open, so for instance, Brisbane Broncos, I would have gone. put my mouse over it, share price is up 2.78%. If I see the share price up 27.8%, I go, oh, it must have been good. Or if it's down 28%, I go, oh, that's pretty negative. For instance, REA Group. Share price down 7.83% on the interim results. Oh, it must have been bad. Must have been bad. But the other thing is, on occasion, do miss announcements that are price sensitive. And a good example of this is Web Travel, whose share price was down as much as 40% on a non-price sensitive announcement. They did get a query from the ASX. So that is the first thing I do. I do this every single day. If I'm working like 12-hour day at my real job, I still look at it. I still find the time to look at it because I'm looking for announcements. And this is how I discover a lot of companies, interesting announcements. And I'll also have a look to see the market reaction. And then if I get a nice chart, I put it into my watch list. That's as simple as it's as simple as I get. So really short, not a lot of time every single day devoted to this. Fairly short. I can actually do this in like a 20-minute period, even less than that. And the other thing I do is I have a lot of watch lists. I go through this every single weekend. Every single weekend. For instance, I've already started uranium. So I'll just go through this really quickly. I'm just looking for interesting charts. And a lot of times I spend maybe 20 minutes doing this, maybe 30 minutes going through charts. So Paladin, share prices pull back a fair bit. Peninsula, which I am trading, share prices pull back a lot. I would expect a bit of a bounce here, but it may not happen. And that's exactly what I do. So I think the key is because you are own, it's taken me a long time to get where I am. So I started investing 15 years ago, about 15 years ago. It's taken me a long time to get to where I am now. And sometimes it just takes time to know what works for you. So having a process is really important. And then following that process makes everything much easier. So just find your process, what works for you. By the way, it took me a long time. So I never used to have watch lists. Uh, Having trouble evaluating them. So I think keep it simpler. Just keep it simpler and really have fewer watch lists and start off with a less amount of companies you follow. So I would say I follow the whole ASX. Maybe you want to shorten that or limit it to what you follow to maybe the top 300 companies. Yeah, in fact, when I started investing, I only knew a few companies. It's taken a while to learn, or maybe not learn, but to understand there's a lot of companies out there, which companies to avoid, that sort of thing. Hopefully, I've answered your question. Yeah, just make it simpler. What's this one about Rick Rule? Oh, Michael, great name. WR with respect. Is that what WRT is? With respect? Fossil fuel usage. I heard a video from Rick Rule, not sure if his opinion can be trusted, but he says that with all investment in green energy, fossil fuels usage has only decreased marginally. I don't know if that's true. That could be true, but I do think the main thing is there is an alternative to fossil fuels. There is an alternative to fossil fuels, and that alternative is increasing popularity. And if we do see fossil fuels price rises significantly, that alternative will become even more attractive because of prices. And prices in the end drive this sort of thing. And as green energy comes down and down and down in price, more access is there, and we're going to see fossil fuel usage actually come down. That might take a while. China and India still get 65% of energy from fossil fuels, and that's going to come down significantly as well. China is pushing heavily into EVs, that sort of thing, with increased demand for energy for AI data centers. Yeah, so I do think if it's the other thing is I think it's not governments really driving the force for change in this area. It's companies. And when it comes to private companies or publicly listed companies, it all comes down to money. It's all about money, money, money. And if companies can save a lot of money by using green energy instead of fossil fuels, you think they're going to do it? Of course they will. So that's what's going to happen in the future. So my main beef with fossil fuels or oil bulls, we'll call them oil bulls, is there is that alternative. And there will be a greater shift to the alternative if fossil fuel prices go up. So you might get a little bump in fossil fuels and then there'll be a great push. And don't forget, when we do see this happening, there will be a push. There could be even a public push, and politicians understand that particularly if inflation stays elevated, that if fossil fuels go up, inflation will go up. And what do politicians hate a lot? Inflation, because of cost of living pressures. And so there will be probably even more incentive to transition to green energy. Anyway, so I'm a little bit skeptical that we'll see any massive increase in price in fossil fuels because of various reasons. Interesting. Whether this translates to oil price increases may remain to be seen. I agree, too early to jump on oil in general, but oil services might be the go. The other thing I'll mention here is I could be completely wrong and oil prices could double from here, but I want to see that before I get interested in oil. Want to see the proof? Oh, yeah, Qoria. Don't have to talk about that. Bob McMillan says potentials AEL, AR9, MMI, NTU, and PEX. These are potential trades. Okay, so let's have a look at a few of these, whether I am interested. I've already talked about AEL, Amplitude Energy. I actually, yeah, I don't mind this trade. So I'm just looking at the charts for these. I don't mind this chart. Again, for me, it's just the chart. And if gas prices like go sideways and share price of a company goes up, that means the company, there's something there with the company itself. What's a good way to say that? If the share price of a company moves differently than the underlying commodity, then there's something positive or negative about the company. Sort of like Peninsula Energy. Uranium prices going up, but Peninsula share price is going down. Management sucked. Anyway, let's get on to AR9. I have a feeling I wouldn't be that interested in this one just based on the chart. Yeah, for me, this is a chart just based off the chart. Now, maybe if the share price drops to say 76 cents, which is where the share price was back in June. Consider a really big rally. Share price had rallied. A few people thought this was going to the moon or something. I'm pretty sure. And the share price has pulled back a fair bit. So for me, not Arctis. MMI. I have a feeling this one is not interesting to me either. Yeah, for me, this is more of a downtrend right now. Last time share price was this low was back in June. So it's on about at least a 6 month low. NTU and PEX. I have a feeling I don't mind PEX, but I could be wrong. NTU, Northern Minerals. Yeah, for me, the share price in the downtrend more than anything right now. And BEX, Peel Mining. I think this one looks good. I do like this one, Peel Mining. So for me, the one, two of interest here are PEX and Amplitude Energy, just based off the charts. Okay, Rich Christmas Cake says, hi Nappy, or asks, just wondering what you think about the soothsayers like Deutsche Bank and SocGen saying about gold reaching 6,000 in 2026 and Citibank saying silver would go to $150. We can see where the buy and sell orders are, but not the levels where stop losses are placed or the degree of leverage, but the big brokers can. So without that info, where do we stand? First thing I do is I never pay any credence to any sort of these sort of predictions because they're just predicting. Why are they predicting it? And we have seen these sort of predictions be erroneously wrong in the past. And that is why I don't pay any attention to them. Zero attention. I think they're just riding the momentum. And that's about it. They could be right, but they could be significantly wrong as well. So I don't pay any attention to any sort of predictions like this. We're forecasting or predicting the future, unless you're talking about the sun rising every single day, a lot of times you're going to be wrong. And I would say more often than not, Deutsche Bank and SocGen's predictions are wrong. Citibank predictions are wrong probably 50% of the time, maybe 50 or maybe 40 or 60% of the time. So I pay very little attention to forecasts. But a lot of people do, and I don't know one, I don't understand why. Ben Hutchinson says the Black Pearl has found some trade wins. It seems BPG. I discovered this the other day. I just remember the name Black Pearl because of Pirates of the Caribbean, and the chart, I think, if I remember, looked okay. Oh, this is a recent listing. Share price popped up, so it would have been on the Monday, the 2nd of February. So share price increased 14.9%. Did I mention BPG? I must have mentioned it in passing. Share price popped up on that day, but has dropped. In fact, it dropped 11.76% on Friday, and I would imagine the share price would go up a fair bit on Monday because fear, I think, has shifted significantly to maybe a little bit of greed. Kelly Ma, Solstice Resources broke out on the 8th of April 2024 and closed at 15 cents that day. Now it is zero point 0.6 cents. Wow. Solstice Resources. That seems different than Solstice. I can't spell. Oh gee, what is, I'm gonna cheat. No. Solstice. Did I spell it right? Yes, I did. Wait there, Solstice Minerals. Oh, Solstice Resources. Oh God, geez. I'm gonna say Solstice. No, Solstice. I can't even spell again. Solstice. Oh, jeez. There's no Solstice Resources in ASX. Solstice Resources ASX. SLS. What's happening with ComSec here? It's saying SLS. No, Solstice Minerals. Oh, good. Solstice Resources. Are you talking about Solstice Minerals? Did they do a share consolidation? Let's have a look. Let's have a look at the chart because this was on my radar because the share price had rallied a fair bit. It didn't drop on Friday. I expected the share price to drop. Anyway, so this is definitely not the company that Killiman was talking about. Solstice Resources. I can't find it. Just can't find it. Market index says, let's have a look at market index. Solstice. No, I can't find it. Just Solstice Minerals. Anyway, let's move on. Okay, a VB ad. Some commentators are suggesting that the plunge in the gold price is due to Trump's new appointment to head of Reserve Bank, Kevin Walsh. His planned policies will lift the value of the USD via policy of quantitative tightening, which puts pressure on gold prices because quantitative tightening reduces money supply. The Fed will start to sell its government treasuries. Investors will buy more government treasuries instead of gold. I'm well and truly spooked. Today, I quit all my Northern Star shares 4 days ago. I think there was a lot of commentators saying the whole reason why gold silver had dropped is because of Kevin Walsh. They're calling him a hawk, which is really interesting because I thought that Trump was looking for a dovish chair, and he's more hawkish. And the funny thing is, I'm pretty sure Trump wants a lower USD. And yeah, a lot of Walsh's policies would lead to US dollar going up. But the reason why Trump wants a lower USD is to make their exports more attractive. In fact, one of the reasons, or one of the problems of the US dollar being reserve currency is the US dollar would rise in, or did rise in value, which made their exports less attractive, which is one of the reasons why their manufacturing went down a lot. So it's an interesting hire. I don't understand it in terms of what Trump is looking for. I thought he was, yeah, looking for someone who wants to decrease the interest rates, and I'm not sure if Kevin Walsh is that person. Anyway, um, it's weird. I think it's a weird hire. It's an interesting, weird, intriguing hire. And a lot of what Kevin Walsh is saying, I don't absolutely disagree with because he does want a better balance sheet. He wants, yeah, less spending. And I think Australia government should do way less spending as well, because one of the reasons we have inflation is because of government spending. So that's just me. MD Melbourne, don't know what's going on. Even though we had those gains, my retirement income stream keeps shrinking. Just today, I've dropped 3,000. What happened yesterday? Oh, I looked at my drop in my holdings. Whoa, wowzers. Anyway, thought my super CBS CBUS knowledge was paramount. If it keeps dropping, I might have to go back to work till I'm eligible for the age pension. LOL. So the way I look at it, this was a weak drop. And I'm going to talk about this more in tomorrow's technical update video. But if we go and have a look, no, not that one. If we have a look at what happened during the week, so XJO actually wasn't down all that much. Xero was only down 1.8. It seemed like a really bad week, right? Seemed like a really bad week. Equal weight down 5.58. XSO small caps down 7.73. And emerging companies down 9.29%. Mining down 4.57%. So a lot uh, of everything was down during the week, but I think banks were up. Yeah, banks up 3%, which is weird because if I had to say which sector was the most overvalued, it's still the banks. I still think the banks are significantly overvalued. So it's really weird that people were sort of transitioning to overvalued companies. And everyone's saying how overvalued the markets are, yet they're piling the money into banks, and banks aren't safe. Well, I shouldn't say that. Banks are cyclical, and say there is this fear that we're going to recession, that sort of thing. Banks should be going down. Anyway, so we did see a lot of weakness during the week, and I do have a feeling that we're going to have a pretty good day on Monday, unless we see American futures tank, and unless we see commodities could tank as well. So unless we see that, we should have a fairly good day on Monday. Because again, Nasdaq up 2%, Dow Jones up 2.47, Russell 2000 up 3.6. And the other good, interesting thing about this is I saw this in 2008 because I just started working at the Bureau of Meteorology, and quite a few people who were close to retiring, just, a lot of them had to keep on working for a while because their super amounts went down a lot. But unfortunately, a lot of people, not only those with super, but a lot of people who had started investing a few years earlier got completely out of the stock market near the lows. That was a time to start buying, and they all said, "Never getting back in the stock market. It's a gamble, that sort of thing." And that was the time to be buying. Anyway, so does that mean we're at the low? No, but who knows? Maybe we are near the low. Maybe we are near the low. Well, Dow Jones record high. So anyway, black top images. Funny that ICL was up when gold was down. Doesn't make a lot of sense to me. ICL, what's ICL? Incenti Gold? ICL Iceni Gold. Oh, got it close. Yeah, the daily chart looks meh. The funny thing is, yeah, gold. This particular share price of this company hasn't dropped a lot, but I suppose it has gone from 6.7 cents down to 5.5. But have a look at this daily chart. I have very little interest in this particular chart. It does look like on the weekly chart, it has found a bit of a floor, maybe, and it's going sideways. But the way the share price will rally would be on good, positive financial news or good drilling results, something like that. Okay, another one from Marcus Stent. Great to see the progress. Another general question. Can you please discuss the different strategies of buying some of the popular long-term downtrend stocks? CSL, NXT, TLX, Zip, Xero. Option one, before they release reports this month, what parameters do you look for? PE valuation, websites, own research, or other SQL squirrel research that indicates they will have a good report? Well, it's just sometimes you just don't know if they're going to have a good report or not. You just don't know. You honestly don't know. Now, some might say that if you have a look at the chart and the share price starts going up before they release a report, the market is hinting the report's going to be good. And on the flip side, the share price starts going down. There's maybe a higher chance a report will be negative. And I think there is some credence to that. So is the risk of a poor report too high? Option two, are we better to wait for the good report and then jump on, given most companies that have good reports will then perform well over the next few months anyway, and wait a while for the breakout volatility still settles in the market to subside and then jump on with a good trend. The company might not bounce back to previous highs as we might want or expect. Any help appreciated. I have FOMO and want to do option one. Yeah, the problem with doing option one, if you hop on too early, you think, oh, they're going to release a good report. The share price might then plummet, which has happened to me in the past. A good example of this, what's an example of this? DGL. I think it's DGL. For some reason, this popped up on my mind. I think it's a daily chart. I'm forgetting. I'm trying to remember when it happened. Here. Yep, it was here. So this was back in 2024. Share price looked like it had sort of was breaking out before they released a report in February. I thought, ooh, okay, the report might be good. The market is seeing something here. There was no drop. The share price went sideways for like 2 weeks. And then they released their results on the 27th of February. Share price dropped 40.78%. I do remember that. And going, damn you, market, you had me fooled. So there is that risk. So yeah, you are using FOMO saying, well, if they release something good, share price will pop up. I tend to wait. I tend to be, well, actually, not with these sort of companies like CSL, Zip, Xero, not well, CSL and Xero. What I tend to do with higher quality companies, so that might be your criteria. Which of these is high quality companies, which are not? And if I see value in these companies right now, I'm more willing to take a position. And if the share price drops when they release their report, it's even better value. Or maybe you sell out because they didn't perform or something like that. So it all depends on your time frame. Are you willing to hold these companies for the long, long term? And if so, some of these companies could be looking attractive before they release a report. But a lot of times, what I tend to do is, yeah, that's probably the best answer. A lot of companies, like high quality companies, I don't really care about the report. It's about the long term. I will have a look at the report, but I don't use that as a criteria. A lot of my trades, I look for catalysts. And a lot of times the catalyst is their results. So the half year, full year results. A lot of times the catalyst is that. But I have now seen research that shows the uptick companies get from releasing a positive report is now less so than it used to be. Now, I did research on this many, many years ago, which shows you can see a pretty good sizable return, even if you hop onto a company the day after they release a positive report. But it seems like that particular or potential return has decreased. So, and there's research now apparently that backs this up. So, what I do now is I have a look at the quality of the company, have a look at the valuation. Now, a good example of this is Reese. They released a positive report. Was it last year? No, February 2024. Share price on this day went up 18.3%. Now, the share price was already in the uptrend, so you could say the market expected this. And I had a look at the company and went, oh no, it's richly valued at these levels. The P/E ratio was like 50 or 60 for this type of company. No, thank you. And share price has halved since then over a 2 year period. Now I'm holding Reese now, but it's a little bit different. Share price has moved into an uptrend. So I had taken a position in this company before they released results. So it's just based off the trend. But I am a little bit nervous about doing this sort of thing, just buying companies that are in an uptrend before they release results, because we'll go back to Appen. This is what can happen. I think it was Appen. Yeah, it was Appen. A beautiful uptrend, pretty nice uptrend. Although it was showing signs, potential signs of weakening. They released their results on the 26th of February. Share price dropped 33.33%. So that's why I was a little bit nervous about and felt dirty about buying some shares in Appen. Share price did drop 17%, but that's going to bounce higher on Monday. Yeah, so I what I typically do is depending on the quality of the company, high quality versus low quality, why you're buying into that company, and I only use results. I don't, probably the best way to say it is I don't anticipate about the results. I never anticipate or try to forecast whether results are going to be better or worse than expected. Yeah, there's no research out there. There's no way anyone knows. That's why the share price of companies can rise or drop significantly when they release results, because the market didn't anticipate it. It's simple as that. The market didn't know. Hopefully, I've given my answer to that one. Oh, Ben Hutchison, Neuren reveal bad news today regarding EU drug approval. I'm inclined to think there was insider trading last week as the stock had inexplicably sold off. You know, the funny thing is, I thought the very same thing. When I saw what happened here, it was weird. The share price had started to just plummet before. And some people would say, I've read quite a few technical analysis books, and they say exactly the same thing. You can see inside, well, they wouldn't say insider trading, but well, maybe they do. They will say that you can see sort of the future or the potential future just by looking at the movement in share price and volume before a company releases an announcement. You can see it happening. So the share price dropping before they release that announcement, yeah, that is a bit dodgy. And the volume had increased as well. So there's a lot of technical experts who will say that you can see or maybe foreshadow or see bad announcements before they happen just by the chart. Not sure if that's absolutely true, but a lot of times it does look intriguing. Gold Roll says, talking about Lumos again, do you still hold? Yes, I added some on Thursday bounce. Oh, Kelly Ma, Solstice Minerals, got 317 meters at 0.51% copper, 0.19 grams per ton gold, 300 million, et cetera, et cetera. Isn't it worth a $100 million markup? I have no idea. I have no idea with these sort of results. It's really hard to value companies that are pre-revenue. Very hard to value companies that are pre-revenue. So there's a lot of risk, but there's a lot of reward. Because it's really hard to value companies that are pre-revenue, the upside can be enormous. Upside can be enormous. It's much easier to value mature companies. And that's why CBA will never be a 10 bagger over, well, oh, yeah, CBA will not be a 10 bagger over the next 10 years. It won't be. It will trouble probably to be a two bagger over the next 10 years. So mature companies, you don't go into those companies because you hope they're going to be significant capital returns, but the reward is less for those as well. It's more of a dividend company, but even then, dividends fairly low. And the main reason is you can value CBA. We know it's expensive right now because it's really easy to value. For Solstice Minerals, I could I could be an expert in geology, have a look at their drilling results, and then I could say this is company is valued at 400 million, and then I get another geologist who has a look at the results, and they might say, oh, the valuation of this company should be more like $2 billion, and then you get another one. No, true value of this company might be $10 million. So I think you get a wide range of potential valuations, and a lot of times it's the just sentiment that drives the share price up and down. So right now, Solstice Minerals, it's a lot of positive sentiment, just the share price, all the volume. But when I see this sort of pattern, yeah, we're going to see a bit of selling. The very fact we have not seen selling in the last few days is really interesting. That means to me there's a lot of power in this announcement. So I have no idea. Bray Denny, every time I read rundown, I think the market is down. How about daily take? ASX Daily Take. Should I change the title to ASX Daily Take from Rundown? Or maybe if the market is up, ASX Daily Run Up. And if it's down, ASX Daily Rundown. I don't know. I've not even thought about that. I've not thought that rundown would be a suggestion the market is down. But if everyone responds to that and says, hey, you should change the title, I'm willing to change it. I am pretty open-minded. Fantastico says, I think Aura is private company, but not, yeah, it's definitely private, not publicly listed. So its valuation reporting accounting can be dubious at best on takeover of Qoria via scrip deal based on Aura's valuation rather than straight up cash buyout. A bit like skepticism on Vindi's valuation on its subsidiary. I definitely sort of agree with that. Just based off what I read about Aura, I actually don't mind what they're doing, how they are performing, but I do think you have to be a little bit skeptical, not skeptical, but what's a good word? Not skeptical, wary, but you shouldn't look at the numbers and absolutely believe it. But it doesn't mean you should doubt the company and how they're valued. Fantastico, is Peninsula still trending up or broken chart? I definitely on my sell list, this one. So it looked really good. But unfortunately, uranium prices have taken a bit of a tumble. Share price of Peninsula taken a bit of tumble. I would say this is going to bounce. How big the bounce is, no idea. But this is prime for a bounce. And I think uranium prices haven't dropped this much. So this is a sort of an overreaction, maybe. Let's have a look at uranium prices. This is Sprott physical uranium. It has dropped. Oh, it has hit a support level. Interesting. Bit of support. Yeah, anyway, so that sort of makes sense that the company drops a lot more than the underlying commodity. But again, if uranium prices rally from here, Peninsula should rally as well. So at this point in time, I don't like the chart for Peninsula, but I think there's a chance it might rally. Might be a nice little rally. Blacktop images, quick note that might save you some time. Google Sheets has a market template with live data. You can modify the sheet to suit your own formulas, but it saves time updating prices every time. Yes, yes, Google Sheets has a market template. I use that market template, but it was not the best. In fact, if the share price was like 0.06, it just rounded up to 1 cent. And it didn't sort of distinguish between zero point 0.6 cents and 1 cent. And it didn't have every single ASX company. So this was not useful for my specky watch list because a lot of these companies that went not found or something like that, or even the price not found, which was a little bit disturbing. Not disturbing, but the other, by the way, this was in a members only video, so you can become a member if you want. By the way, I'll just show, where is it? Here it is. Yes, so in Excel, this is all live. So I don't have to do anything. Don't have to change the prices. So current price, 2nd of January price. I only had to change a few. 2nd January prices is my specky because they didn't trade on that day. But this is all updating live. So by the way, specky only up 5%. It was up 20% last week. Non-specky 3.5. Oh, look at your portfolio down 15%. Ooh, ugly. Anyway, so I did try Google Sheets first, and then I transitioned to Excel because just because of the specky watch list. But thank you for that. Fishball, some of these blue chip. It's funny that a lot of people will refer to like companies like CBA or the major banks, Telstra, all those companies as blue chip. And I think blue chip has this there's this thought that blue chip means the better companies, quality companies. And I think that's a wrong way to look at blue chips. I don't even think about companies as blue chips or not, but just because of that. Anyway, so I think instead of terms of quality, non-quality, and these companies, Xero, WiseTech, Technology One, Seek, Pro Medicus, Car Group, REA, Jumbo, Audinate. A few of those companies I would consider high quality. I think there is a threat now for some of these software companies, but I still think some of these companies would be high quality. I'll go through these charts now, and if they are high quality, typically what I look for is where the share price is in relation to the 200-week moving average, because I do like this little strategy. Xero is well below it. I still remember when it below a few months ago, 10th of November, share price just went straight below the 200-week moving average. And I would have said, oh, this could be a good buying opportunity. The share price just keeps on dropping. So at Xero, what else do we have here? WiseTech. WiseTech probably is still dropping. This is well below the 200-week moving average. Share price is now at 2022 levels. I do think there could be value in this one right now. But I think a lot of these companies are being sold because of this fear. Technology One, I would say Technology One, this is one I did take profits in. And share price $22. Share price has almost halved since the highs. Uh, and the valuation of Technology One back then was a little bit lofty. P ratio was above 100. Now it's 55. So it's getting to the point where Technology One is starting to look good value. But again, I think the fear is that these companies are going to be destroyed by AI. Sort of like how the fear was JB Hi-Fi will be destroyed by Amazon, which never happened. Anyway, let's have a look at the valuation of this company right now. P ratio 58. Let's have a look. By the way, it does it now. Fiscal AI has changed where it now includes your previous metrics because I wasn't looking at revenue income for Technology One. It was another company. This is good. This is a good change. P ratio. It means we do have to get rid of revenue and this. Okay, it's got a little bit more to drop. So this is the last 10 years. Looks like if it drops towards 40, that would be a good price for Technology One. So it's getting close, but that's a good price. Yeah, it was above 100 recently. And that's one of the reasons I took some profits in Technology One. What else do you have here? Seek, PME, and Car. Seek, PME, and Car. I think Seek share price has dropped a fair bit. Now, this is a little bit different. In fact, a sharp drop below a support level. Interesting enough. SEEK's a little bit different because I have looked at SEEK in the past and I've gone, is this a high quality company? But I was impressed with something I read about this company recently. It looks like they might be undergoing a growth phase. But again, I think this company's being sold off because of fears of AI. What was the other one? Pro Medicus share price has dropped a fair bit. I think it's halved, definitely halved by now. So I did take profits in Pro Medicus. I think this was in probably April, May. And look where the share price is now. It's at the 200-week moving average, which historically has been a great time to buy this company. But there would be some who say this is expensive at 150p ratio. And it's just fallen below, looks like fallen below the previous low in April. And I do know some people were really excited at that low, at that price. So people are excited about Pro Medicus right now. And what else did you have? Car and AEA. I think I've already talked about REA. I talked about REA yesterday, so you can have a look at that video. Car Group. Oh, look at that. Yep. This could be good buying too. Again, I think a lot of people are fearful. Oh my God, AI is going to destroy Car Group. I'm not sure if that is true because Car Group really isn't a software company, is it? It's a, it's a, what do you call it? A marketplace thingy. And what's the other one? Oh, is REA. We'll just have a quick look at REA chart. Oh, this one's bound. Oh, we knew that already, but the weekly chart again, close to buying levels. And I won't have a look at the others. I'll just keep it capped at that. We'd love to hear what everyone think here. I plan to buy a small amount today, add more if it keeps getting hammered. One of my friend will buy once it rebounds on heavy volume to signal the low is in place. Either way, I think this is a good opportunity. Roggle Dawn says, think they still have more to go. Actually, there seems to be general pessimism to tech stocks at the moment, because people feel they'll be displaced by AI. But then again, corporate AI take up doesn't seem to be going well. Hard to know where the bottom is, but you're right, the trend is down right now. I sort of agree with Roggle Dawn. I think there's still potential more to fall. And I think the way I would play this is I'm just going to wait for a rebound, maybe. I don't know. So I will add to some of these positions if I get the sort of a signal. But based off what I look at the chart, some of these companies could be considered good value right now. The other thing I should mention before I move on to the next question from Roggle Dawn is a lot of these companies have been priced at a premium. Will that continue in the past? With the fear of AI lingering, will these companies trade at a premium in the future? And that's probably a good question to ask yourself or ask AI. Ask AI. Will these companies continue to trade at a premium? I was going to say perform at a premium. Trade at a premium in the future. Roggle Dawn says TKM looks like a breakout. What is this company? TKM? I can't tell you. Trek Metals. Straight away, I knew Trek Metals. Interesting chart. Has gone bonkers. So again, this is another case where the share price has gone bonkers, has gone exponentially higher. I would like to see a bit of a pullback. There's a one-day pullback, but the very fact share price up 10.71% on Friday is interesting in itself. So a really good chart here for Trek Metals, but yeah, will we see a pullback? Oh, okay. Someone says in regards to my daily rundown videos, can I request to keep your videos short as shortage of time? A little bit of a pushback. I'm willing, if everyone gave this a lot of likes and a lot of agreement, I'm willing to push it back a little bit. But Peter says, no, mate, don't change a thing. We all have different levels of interest in the various sections of the videos, even the Neppy rants from time to time, and can always fast forward bits if we want to. Yeah. If there's a 5 minute blurb on CBR, I'll happily fast forward to the next section. Someone else might be interested in that and then skip the DVP section that I'm glued to. There you go. And 11 thumbs up for that. 8 thumbs up for Sensei. Agreed. Long uploads are good. Plus, Neppy puts timestamps so viewers can fast forward as required. Kelly Mars says, well said to Peter M. Oh, that was how come someone be so, well, let's not be mean. How come someone be so selfish and ignorant? I guess that's what makes Earth an interesting place to live on. I agree with that. Everyone's different. I changed the speed to 1.25, which cut it back a bit. I always listen to podcasts at 1.25. However, I sometimes can speak pretty quickly, and I'm trying to speak slower. And Anderson says, don't change your formula. Some of the best things I've learned was in free flow chat between charts. Entertaining as well. You're an interesting person. Well, I don't know if I'm an interesting person. There is fast forward functionality for different perspectives. Timestamps help. And keep the long format for the same. Love the in-depth look. I learn something new every day. It's interesting that I do try to keep these videos to under 30 minutes. And I just keep on talking. For instance, today I want to keep this video under an hour, and we're now at an hour and 30 minutes. Sometimes I just talk. Just acronym Technology One down 46% from the peak, still 54 times PE. Next support line is 1450. I've already looked at this chart, haven't I? So I was linger a little bit more on this. Or should I? Because I've already talked about PE. It has fallen below those long lows. I would say the next support, yeah, it's a fair bit lower than it is now. I'm going to say this is significantly oversold, but I never use that as a reason to buy or sell. And there's going to be a reason behind that. And maybe Technology One is that reason. Oh, it's just gone into oversold territory. The reason I never buy or sell, or whether it's oversold or overbought, is actually pretty obvious when you look at Technology One between 22nd of July 2024 and 1 year later, June 2025. It was overbought that whole entire time on the weekly chart, and the share price kept on rising. Yeah, this is the reason why I don't necessarily buy or sell. So someone who would say, "Oh, this is oversold, I'm going to buy." No, I think it's a bit more nuanced than that, I think, if that's the right way to say it. Oh, anyway. Oh, just acronym said something really interesting here. So strange that we're using CommSec Market Index and not ASX, who owns all the data. ASX is the deadbeat company. CEO collects salary for doing nothing, no innovation whatsoever, still no pre and after market trading. It's really interesting. I had never thought about this, that I just use other companies' platforms to look at ASX data. And there's a whole reason behind that. I do know some people go to ASX announcements or something like that. But if you go to ASX website, I never go to ASX. Never have a look at their website. Price sensitive announcements. Well, that's interesting. This is a little bit different. See your announcements. Oh, they have changed this because they never used to have this functionality. We can just have a look at price sensitive announcements. They have changed it. So, today's announcements. Oh, so you can't even see. No announcements published today, yeah, because it's closed. So you can't even have a look at previous announcements if you clicked on that. Today's announcements, recent and past announcements. Let's just go to previous trading day. Oh no, you can't even. Oh, for freak's sake. Oh, you can't even have a look. So again, I'm getting frustrated now because I want to have a look at yesterday's announcements. Oh, there we go. This has changed. It's either changed. Well, I very rarely have a look at ASX websites, so maybe this has been like this for a while. But a really interesting comment from, yeah, really interesting comment from Just Acronym because they have a monopoly and they should be doing so much more with all the data they have. Oh, they could be doing so much with the data they have. And it's just so interesting. I go to CommSec Market Index to look at all the data, ASX data. Anyway. Reese 281 says Amcor beat quarter one earnings expectations. Yes. And Amcor was second stock of the day on February the 4th. But the share price, there's a chance this chart is looking good. There's a chance this chart is looking good. If we have a look at the daily chart, oh, yes, it's popped up. We have seen a pop up in AMC. This could be a nice little buy. AMC. Nice potential buy for AMC or Amcor. Oliver Minchin says, what do you think of TVN? Huge market cap for remote resource. I have zero thoughts in TVN. Is it Tivian? TVN? Tivian. I don't know anything about this company. They upgraded their mineral resource estimate for Speewah. I don't even remember looking at this. So I'm assuming what you mean for remote resource, it's low, or is it in a really remote spot in the world? Fluorite resource. I know nothing about fluorite. I couldn't tell you a single thing about fluorite. Couldn't tell a single thing about this company. 43 point million tons at 8.3% fluorite, CaF2. Calcium fluoride. What's it used for? Chemical production, optics, industrial laboratory. First time I ever thought about mining this. Well, not personally, but I have no understanding of this company at all. If you have a look at the most recent Appendix 5B, I doubt they're a producer. I'm just going to assume they're just a explorer. And anyway, so I don't know anything about this company. So typically, if I don't know anything about the company, what I do is just have a look at the chart. If the chart looks interesting, I might have a closer look. Oh, and the chart does look interesting. So I might have a closer look at this one because I doubt this is on any of my watch lists. Let me have a look. No, it's not on any of my watch lists, which means I've never looked at this company in the past. So let's have a look. I'll put this into my mining. So the only reason I'd be interested in this one is that at this point in time is just the chart, but you obviously know more about this company than I do. No, nothing. I know nothing. What's the market cap, by the way? What is the market cap? No, $1 billion. Ooh. Okay, so this is where it becomes interesting. So the chart looks good. Market cap $1 billion. What's the potential you're going to get much return out of that? If the market was $9 million, you go, ooh, if the market discovers this company, share price could go bananas. But at 948.67 million, maybe the market's already pricing this company to have significant success. But there is a chance that maybe it is cheap. But again, I don't know. I know nothing about the company. Designation says, what would be your exact top three favorite sports luxury cars to buy if you had $4 million budget? I would not buy any sports or luxury cars. Zero. I don't have that much interest. And unless you think of them as investments, which means you wouldn't drive them, the depreciation in cars would be significant. So if I had a $4 million budget, I'd probably buy a nice car, but not an expensive car. Because, yeah, that's just me. I don't have interest in that sort of thing. In fact, I wouldn't be, if I had $4 million budget, like if I had right now, if I was getting $4 million a year, I still wouldn't buy it. If I just had $4 million, like I won in a lottery or I got an inheritance, $4 million, I would not even think about. I might buy a nice, maybe $50,000 car. That would be it. Then I'll put it to work as investments. A lot of people waste their money, like lottery owners. They probably waste a lot of money buying all these cars and boats and massive mansions. When they should be doing, let your money work for you if you get that sort of money. Anyway, I'm a little bit different, I suppose. Hi, Neppy. The other day I heard you talk about a company being on the 200-week moving average. I'm trying to find that episode again. I think it may have been in Pro Medicus or ResMed. Can you help? Or anyone help me? Well, I've been talking about this a lot. So it could be any company at all. Any company. In fact, I've been talking about 200-week moving average a lot in this particular video. So have a look at some of the companies I've been talking about in this video, particularly those bigger, higher quality companies. Piwu says, have you sold Mayfield Group? Is it worth keeping it for the long time? Thank you. Sold, bought at 79 cents. It had its run, get back into cash, I think, for the next month or so. So, no, I have not taken any profits in Mayfield Group. It's one of my biggest holdings. Share price has taken a bit of a hit. It's gone from 340 down to 270. Oh, it did fall through a potential sell level at 280. So it did rise 4.65% on Friday, which is interesting against the market. So this chart is looking different, definitely looking different. Have not taken profits in this one, but the chart does look toppish. Does look toppish. So there's a chance I might take profits in this one. So this is a case where I haven't looked at this chart for a week, and the share price has dropped a fair bit in that week. In fact, in the last week, it's dropped 12.62%. And that includes the rally on Friday. Now, with the market hopefully up big on Monday, this should be potentially back up to $3, maybe. So just by looking at the chart, close to selling, maybe not completely. Stage two trader took up a starting position on SKS Technologies today based on that announcement. Quite like the margin expansion, there still seems to be a bit of supply despite the positive announcement. Then Michael, another good name, says the companies in a downtrend in a poor performing sector will most likely to continue to go down. And then Method 341 says you need to get a zoom out, Sunshine, because it's been going up for a while now. And then stage two trader says it's either in a topping phase or consolidation for next leg up. We'll monitor price action and exit if stop is hit. Well, interesting enough, the sector, the reason the share price has been going up is because of what they're doing. SKS Technologies has been ramping into data centers, and that has been, well, it's been really good for SKS Technologies over the last 2 years. In fact, ever since AI started becoming more and more of the thing, and data centers became more and more of a thing, share price of this company has gone bananas. So it's a good performing sector at this point in time, which is why, if you look at the long-term chart, the share price looks phenomenal. Now, right now, the share price has been a little bit volatile. A really good run up in share price. Share price pulled back. Another good run up. Looks like maybe a double top there. The most recent low was a little bit higher than the previous low. Then they released a pretty good announcement on Thursday, if I remember correctly. Share price up 8.5% on that day, up another 2.4% on that day. So nice profits for the company. They're growing more contracts. So if anything, I would not agree with Michael Dio. It's not a downtrend, not in poor performing sector. I wouldn't say the chart looks spectacular because we have seen the share price at a high level over the last few months. So there would be a little bit of resistance moving forward. But the positive announcement is a good one. By the way, I did take profits a while ago, and I'm just holding this company for the longer term until the tailwinds come to an end. Happy Now says, my thoughts will be totally wrong compared to yours, but very interesting. I just want to say you're wrong. Your thoughts are not totally wrong, different, different. I could be wrong. I could be wrong and you could be right. So different. So I could be wrong. I'm wrong a lot. So you could be right. You could be right. So your thoughts are not totally wrong. They're totally different. Okay. Hi, Michael. Hope you aren't bummed down by the market today. Bumped down. Indices are only like 3 to 5% off the all-time highs. Dow Jones at all-time highs today. But so many investors are worried. Anyways, the only thing I may want to buy is crypto ETF. Can you please send 5 minutes talking about which ETF you can recommend? I know you can't recommend stocks, but somehow crypto you can LOL. I couldn't even tell you any crypto ETFs at all off the top of my head. Crypto ETFs. CRYP. Well, these charts are going to look terrible. So, how big is it? I'm going to just say to you or recommend to you, just Google crypto, or maybe not Google. Let's have a look. Crypto ETFs ASX. Just do this in ChatGPT or Gemini, and it should give you a nice little list of crypto ETFs. So spot direct crypto ETFs, VBT said VanEck Bitcoin ETF, Global X 21 shares Bitcoin ETF. There are also Ethereum ETFs available through some issuers. Crypto related equity ETFs, there's that CRYP, BetaShares Crypto Innovators ETF, does not hold crypto directly. Instead, invest in companies involved in the crypto ecosystem. So that's a little bit different. Another crypto ETFs, ETPs, Ethereum focused ETFs, EETH, QETH, tracks the price of Ethereum, Bitcoin ETF wrappers. There's a lot of stuff I don't know anything about here. Okay, and then it says what an ETF is, blah, blah, blah. I would do that because I'm not an expert in ETFs and crypto ETFs. So that's all I can really talk about when it comes to 5 minutes. Hmm. Yes, but I know you can't recommend stocks, but somehow crypto you can. The other thing is I would never recommend any sort of investments. I would never recommend property, never recommend crypto, never recommend paintings, never recommend anything. That's just me. I would never recommend, even if recommending stocks was allowable, I would not do it. I would not do it at all. Um, because again, I could be completely wrong. I could say, even when I think a company is good, it looks good value, I still could be completely wrong. Kelly Ma, I found out that the share price of Echo IQ did not correct much while other stocks share price down more than 10% today. Probably a good sign. Would you be able to have another look at the chart of EIQ? Let's have a look at this one because the share price had popped up a lot. I would have expected the share price of this one to pull back a fair bit. It has pulled back a little bit. So it's a nice little pullback. It's gone from 56 cents to 45.5 cents. So share price did drop 5%. We did see decreasing volume during this pullback, which is a good thing. I could imagine this pulling higher on Monday a fair bit as well. So Echo IQ chart doesn't look half bad. So I'm going to say it looks pretty good, half bad. I do like this pullback. Uh, I would have expected after this really good rally, the share price might have gone down a lot. Now, the share price could keep on dropping and dropping and dropping, decreasing volume, which is telling us if that happens, the market has no more interest in this company. And a lot of times when I see this, I would wait for a bounce and then buy in. I've done that a few times in the past. Sort of confirmation. Neppy, I have Ben Hutchison. Neppy, I have you in part to thank for a decision to sell out of EOS about a week ago. Early last week, you remarked the EOS was looking toppish, which prompted me to put it on close watch and, in fact, sell before it slipped below 9. Very relieved and balances my poor double down decision yesterday with Mass Group. I think Electro Optics may spend a good while in the doghouse. Now, regardless of what they say, I wish I was listening to myself here. In hindsight, it's in my super, and I tried not to trade my super, but I think I might change that because quite a few times now I've looked at a chart and went, oh, this is looking a bit toppish, and I didn't sell. And then, like a few months later, go, yeah, I should have sold out of that position. Three examples of this: Electro Optics now, Audinate. I think I've already shown this one. Audinate. This was looking really toppish back in like 2 years ago. And the other one was Telix. This one is ingrained in my mind. So I bought Telix a long time ago, 2022. It was looking really toppish. Middle of last year, no, April last year, share price was looking a bit toppish. Definitely getting sell signals in June. Share price at $26. And I went, nah, I'll maintain a holding. Uh, and I sort of regret that now. And so I'm now more willing to take profits in these sort of companies, which I have been doing now. I just wish I took profits in Telix alongside the other companies, which I didn't. I don't know why, because it was looking toppish. I think I had a little bit of, I wouldn't say I was in love with this company, but I thought, wow, this company could be significantly higher in the future. Anyway, so it's all about learning. You say there's going to be a bear market ahead, I'm afraid. Shocker. Dow Jones, all-time high. Dow Jones all-time high on Friday. Their session. Just saying, just saying. We're not really getting any bear market signals just yet. The ASX just does look weak, compared. I'm not there yet saying this is a bear market, but there are has been some interesting pullbacks and a lot more volatility. So be a little bit more aware of the potential moving forward. Since you mentioned that you sold a lot of your stocks recently, I was wondering if Rocket Boots was among them. No, Rocket Boots was not among them. I sold. What I'm going to do over the weekend is just have a look at some of these charts like Rocket Boots and just assess them and see what happens on Monday. So I expect a few of these to bounce. If I don't get a bounce, I might sell them on Monday. So Rocket Boots, I expect a bounce. And if not, I might sell. And finally, no, a couple more to go. Hi, Neppy. Trajan just released its trading update on Friday. I would like to hear from you about the company future. The share price has dropped a lot since listed in 2021. Okay, so Trajan Holdings is a real company. They're selling something. Unfortunately for Trajan, yeah. So unfortunately for Trajan, Not much happening, I think, in their results. So here we go. Revenue growth of 3.8%. Nah, nah. Group normalized EBITDA, $2.9 million lower. So from 7.9 million to 5 million. Meh. Challenged quarter one. Revenue observed a distinct decrease over previous corresponding period in quarter one. That's capital equipment. Stronger quarter two. Margin expansion. I do like that. And guidance maintained. Revenue guidance 170 million and group N EBITDA expected to exceed $16 million. That's normalized EBITDA. $16 million. So the problem with Trajan is it's a real company. They have a profit. So we can sort of value this company right now. If you have a look at the financials, we'll go, not have a look at that. We'll go to the financials, revenue and income. We'll just have a look at this. Really a rough look. This company's been barely profitable. The highest profit they have, according to its highest profit, was in 2020 at 2.6 million. So that's a problem. They've been increasing their revenue, but their profit has not been increasing. Maybe there's a couple of one-offs in the last few years. Let's have a look at the cash flow. We'll go to operating cash flow. Let's have a look at free cash flow. And we'll get rid of revenue so we can have a look at this better. So free cash flow and operating cash flow have actually been positive the last few years, but they haven't really gained any traction. So that's the problem. Not a lot of momentum in the company. And at this point in time, the market's just not interested in Trajan. And in fact, I do follow this company. When I say follow, I just have a look at the chart every week, and I'm just looking for a bit of a turnaround. In fact, I put this uptrend line here back in 2024, but it wasn't really any sort of trade. And the share price has just gone from 460 to 68 cents. Now, maybe there's value, well, maybe not. Markup 102.2 million. So, yeah, I'm not that attracted to the financials of the company just yet. They have to gain some traction in their business for me to be excited. Share price has dropped a lot, but I think this is reasonable, much more reasonable value than it was back then. Just too much FOMO, maybe. Okay, blacktop images. I've been busy during the day, so set a few sell orders last week after hours. None of them hit. Wasn't quick enough. Only realized the market dumped Friday when I got home and my wife said, "Did you lose money today?" Which confused me because she knows nothing of the market or even what I do in the market. That could be a sign that this is the bottom. If people who have no idea about the market are saying, "Oh, what a big sell-off," that could be the sign of the bottom. Did you lose money today? I would have answered with no, but my valuation of my holdings went down, but I did not lose money because losing money implies that it's gone forever. But if the market goes up 20% in the next week, that money has not lost. You found it again. So I don't like the terminology that the market lost. The market lost $2 billion today. That's not true. It went down $2 billion. When the valuation went down, it's not a loss. A loss is, well, I suppose a loss is permanent. Is a loss permanent? Is a loss permanent? Ah, well, whether loss is permanent depends heavily on the type of loss, cognitive and physical or emotional. No, whatever. Well, they're talking about memories. Is a loss permanent? I just want to know what definition of a loss. The fact or process of losing something or someone. The amount of money lost by a business organization, insurance can protect you against a financial loss. The way I look at loss, yeah, the way I look at loss, it's forever. Because if you find it, then it's not a loss. You found it again. It might be a permanent loss or you misplaced it. If you say you lost your wallet, I've lost my wallet, but then if you've refound it, you didn't lose it. You've refound it. So yeah, loss is a permanent thing for me. So the way I look at this is my valuation went down on Friday, but I might regather that valuation over the next few weeks. It hasn't been lost forever, unless you sold it. Unless you sold everything on Friday, then it is a loss. So you crystallize your loss, I suppose. Anyway, that's it for today. I'm under 2 hours. So maybe what I need to do in the future is limit the amount of questions and comments I reply to. Anyway, if you have any questions or comments you would like me to answer or reply to, leave those in the comment section of the video. And don't forget, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.